We're talking about a monumental transformation, and at its heart lies a pivotal piece of legislation that has just achieved a significant breakthrough in the U.S. Senate. We are witnessing a historic moment with the passage of the Genius Act, a bill that aims to bring much-needed structure and clarity to the burgeoning world of digital assets. This development is not just about new rules, it's about setting the stage for how we interact with money and digital currency for years to come. This landmark legislation, officially known as the Guiding and Establishing National Innovation for U.S. Stablecoins, Genius Act, specifically targets stablecoins. These are a unique type of cryptocurrency designed to maintain a fixed value by being tied to a real-world asset, most often the U.S. dollar. Unlike volatile cryptocurrencies such as Bitcoin or Ethereum, stablecoins are intended to function like a digital dollar, holding a stable value over time and serving as a crucial medium of exchange in the crypto world, speeding up transactions. In fact, they act as a reserve currency within the crypto ecosystem, allowing traders to swiftly move between digital assets without reverting to slower traditional cash transactions. Currently, the stablecoin market alone represents a staggering $238 billion of the multi-trillion-dollar cryptocurrency system. The Senate approved the Genius Act on June 17, 2025, with a bipartisan vote of 68-30. This overwhelming support represents a significant victory for the cryptocurrency industry, which poured an estimated $250 million into the 2024 election cycle, aiming to cultivate what is now considered the most pro-crypto Congress in U.S. history. Chairman French Hill of the House Committee on Financial Services applauded the Senate's action, emphasizing that clear rules for stablecoins are long overdue and that this marks a step closer to a functional regulatory framework. Senator Tim Scott, a key co-sponsor, championed the bill's passage as a historic day and a bold step forward for financial innovation and American leadership. Other prominent co-sponsors included Senators Bill Hagerty, Kirsten Gillibrand, Cynthia Lummis, and Angela Alsobrooks, highlighting the wide range of political interests that ultimately pushed this legislation forward. Supporters of the Genius Act champion it as a move toward American leadership, consumer protection, and economic opportunity in the digital space. Senator Bill Hagerty, a lead co-sponsor, stated that the legislation is about positioning the United States at the forefront of digital payments, ensuring consumer protection, and solidifying the dominance of the U.S. dollar by driving demand for U.S. treasuries. The bill seeks to establish guardrails for the industry, including requirements for full reserve backing, monthly audits, and public disclosure of reserve composition, and adherence to anti-money laundering and anti-terrorism compliance standards. It is hoped that this clearer framework will empower banks, fintech companies, and major retailers to issue their own cryptocurrencies, fostering greater confidence and security for consumers and businesses alike. Treasury Secretary Scott Bessent has even projected that the U.S. stablecoin market could expand to over $2 trillion in the coming years, indicating the immense economic potential seen by proponents. However, the passage of the Genius Act has also ignited considerable controversy and faced strong opposition. Critics, including Policy Director and COO for Better Markets, Amanda Fisher, warned that the bill puts consumers, investors, and the broader economy at risk. They argue that the legislation fails to adequately address fundamental issues like the susceptibility of stablecoin companies to market runs, bankruptcies, and the potential for taxpayer-funded bailouts. Fisher contends that the bill encourages the use of stablecoins without applying the robust consumer protections found in traditional payment laws. Concerns are also raised about the possibility of big tech and non-financial companies issuing their own currencies, which could lead to significant issues with fair competition, data privacy, and surveillance. Furthermore, critics point to a lack of proper safeguards against national security risks unique to crypto and perceived loopholes benefiting opaque foreign stablecoins like Tether. A significant point of contention revolves around the bill's perceived loopholes regarding presidential financial interests in the crypto sector. While the Genius Act includes a provision that prohibits members of Congress and senior executive branch officials from issuing stablecoin products during their public service, this prohibition does not extend to the president and their family. This omission has drawn sharp criticism from Democrats, including Senator Elizabeth Warren, who has vocally warned that the bill could, quote, supercharge corruption and allow President Trump to effectively regulate his own financial companies and competitors. Senator Jeff Merkley echoed these concerns, accusing Republicans of rubber stamping Trump's crypto corruption and allowing the president to sell access to the government for personal profit. Recent financial disclosures show President Trump earned at least $57 million in 2024 alone from token sales tied to World Liberty Financial, a crypto platform closely associated with his brand, which also launched its own stablecoin, USD1. This personal financial involvement fueled the fiery debates surrounding the bill's ethics provisions. The journey of the Genius Act through the Senate was not without its challenges. It experienced a significant setback in early May, when a bloc of Democrats, initially supportive, reversed course due to precisely these concerns over the president's cryptocurrency dealings and a demand for stronger national security and anti-money laundering provisions. This led to intense bipartisan negotiations involving various senators, including Hagerty, Lummis, Mark Warner, Kirsten Gillibrand, Angela Alsobrooks, and Ruben Gallego. These discussions ultimately resulted in amendments that garnered enough Democratic support for the bill to advance, clearing a key 60-vote threshold. Despite these compromises, some senators, like Cynthia Lummis, while accepting the outcome, expressed that they were not thrilled with the final version, acknowledging the difficulty of the legislative process for digital assets. Senator Hagerty similarly described the negotiations as murder to get certain Democrats on board. Now the Genius Act moves to the House of Representatives for further consideration. The House has its own version of stablecoin legislation, and reconciling the differences between the two, particularly concerning regulatory oversight, where the Senate version centralizes authority with the Treasury and the House bill proposes splitting it among various federal organizations, could be a lengthy process. President Trump has expressed a desire for stablecoin legislation to reach his desk before Congress's August recess, underscoring the political urgency behind this financial shift. This legislative push underscores a broader shift in finance, as stablecoins, with their promise of instant settlement and lower transaction fees, are already posing a direct challenge to traditional payment systems. With stablecoin transactions reportedly surpassing the combined volume of MasterCard and Visa last year, and companies like Shopify already rolling out stablecoin-powered payments, the stakes are undeniable. Financial institutions like Bank of America are exploring their own stablecoin issuance, while JPMorgan Chase has launched a deposit token for institutional clients. The Genius Act represents a crucial, albeit controversial step in defining the future of digital currency in the United States, promising clearer rules but simultaneously raising significant concerns about consumer protection and potential government bailouts should the nascent industry face collapse. Thank you so much for joining me today to understand this complex but incredibly important development in the world of finance. I hope this discussion has shed some light on the potential impacts and ongoing debates. Be sure to stay informed as this story continues to unfold.